Welcome, ladies and babies. Pucker up. I just put on some chapstick. So, I hope you're ready. Let's get straight into it. Moneypreneurs episode 4. Bam. Hopefully it was on the screen. At this point, I'm just going to assume it was on the screen. So, bam, I'll do it again. I don't think Kay added it twice. It'd be funny if he did. But if you're not in the Discord, join the Discord. Link in the description. And let's get straight into it. Moneypreneurs episode 4. Execution. A lot of you guys are DMing me. Yo, Lonnie, no, I'm starting to get the basics down. Okay, I got my bias down, I got my retracements down, but I'm still struggling on executing within my trades and holding my trades until take profit. So, I enter the trade, I get into it, price starts to reverse in a little bit of drawdown, and I start to get emotional. What do I do? What do I do? I emphasize game plans already. I emphasize all of that. But you guys have to understand one thing. Your emotion derives from your strategy. Your emotion does derive from your game plan. But more so your strategy. Why is your SL where it is? Why are you trading how you're trading? These things will affect, either positively or negatively affect your trading. And let's get into it. We'll get into why and we'll get into all the sorts. So enough yapping. Let's go do it. For you guys that did see the YouTube video the other day, the 11.1k trade recap, if you didn't see it, first link in the description, click it, go watch that video. But we're going to use this trade for an example of scaling down in time frames and waiting for your proper executions and how to properly execute on days where price action may look a little janky. So let's start off on daily time frame. Scale down. We're going to make it slow. I'm joking. No, we're not. Bam. Daily came up, took a liquidity. 4 hour. What did we do? We started to fill more orders, break structure back to the downside. Thursday, filling this fair value gap, pushing to the downside. I don't know how many times we're talking about this fair value gap in the videos, but I've talked about it a lot, and now we're talking really, really fast. So let's continue to keep it really, really fast. Anyway, we came in retracing this 4 hour fair value gap, break structure to the downside. Friday, what did we do? We came in retracing into this other buying 4 hour fair value gap, filling buy orders on Sunday, pushing back to the upside. Where did we push back to the upside to? Back up to not this 4 hour fair value gap, but instead a 1 hour order block where we came in and filled more orders during Asian session, pushing price to the downside. Am I going too fast? Hopefully I'm not going too fast. Let's continue to keep going fast. Unless you want me to slow down, then we can slow down. Anyway, if you need to go back and rewatch that, watch it in slow-mo. No, let's actually slow down. Price came up after retracing into this 1 hour order block, breaking structure to the downside, coming up, doing what? Sweeping these hourly highs. Bam, for liquidity right here, pushing back to the downside. What did we do on the day of the trade? We waited for 1 hour to retrace back into this fair value gap. You can see we're simply scaling down time frames, but now we're going to get into the nitty gritty of, okay, the actual execution point. Because it's easy to mark out a bunch of stuff. Anyone can do that. You can go on the charts, you can mark out a bunch of retracement tools, blah, blah, blah. But when you go in and execute, that's the part where it gets a lot of people. So, you have to have your set of rules. Your set of rules. That wasn't a fluke. I didn't say by accident. You need to have your set of rules. Why? You have to know, how am I going to enter within the markets? What am I going to execute on? Figure out with your trade strategy, okay, what is most comfortable with me? Do I want to be like Lonnie and execute on liquidity sweep break structure? Or do I want to be like, TGR and execute on everything of the sort, order block retracements for value gap retracements, all the sort? Or do I want to be, I don't know any other traders, but let's start going into different strategies: support, resistance, execute, when price hits support, or price hits resistance, or as supply and demand traders, or whatever the case is, right? Figure out, okay, what is comfortable for me? How do you figure this out? You go in and you back test it. You go in and you see, okay, what am I executing on? What am I plotting out that I find works for me continuously? There's people that I know that for them, order blocks and equilibrium works best for them. That doesn't work best for me. For me, it works best liquidity sweep, break a structure. That's what works for me. Figure out what works for you. This is how you get an understanding of, okay, now I know what I'm going to execute on. Now I need to figure out how I'm going to execute. This is what we do. We scale down in time frames, and you use your overall macro retracement tools. You have to make sure that when you do use these retracement tools, you are patient. I cannot emphasize patience enough. That is the one thing I've been emphasizing in the majority of the videos, and one thing I've been emphasizing within the Discord. And a lot of people have seen a lot of gain because they've been patient. Their win rate has increased. They've seen more blues in their MetaTrader. Why? Because they're waiting. They're allowing price action to give them a setup instead of going in and forcing it. Remember, you execute. When you execute is when price action gives you a setup. Not you forcing the setup, but when price action gives you a setup in order to be like, okay, hey, here is your A plus setup. You're ready to execute. Apart from that, if your setup does not showcase, you should not be looking to trade. If you enter on liquidity sweep break structure and you're trying to look to, enter on a fair value gap retracement and you don't know how to properly trade fair value gap retracements because you haven't watched the Money Printer series, that was a plug. You shouldn't be entering. Right? So, figure out what works for me. Me personally, liquidity sweep break structure works for me. I like seeing highs get taken out before the push to the downside. A lot of people may ask why. Because it gives me extra confluence for retracement tools. In this trade, we came up and we took out 5-minute highs. You have to remember, what happens when we sweep something? We create an order block, a price range where orders are able to get filled. If my execution is at the break of structure, the liquidity sweep break of structure, I have a nice probability that, hey, if price action retraces and I have a validating stop loss, remember what that means when price action surpasses your stop loss, it means your trade idea is no longer valid. If I have this stop loss within the order block, or even at times above the order block, and I have a retracement tool within it, such as a 5-minute fair value gap, as you can see here, if we zoom in, bam, as you can see there, I have extra confluence that, hey, this trade probability may go within my favor. Remember, there's no such thing as luck within trading. You put yourselves in the probable circumstances, the most probable circumstances. That's our job, to put ourselves in the most probable trading circumstances in order to see, okay, when we execute on our setups, when we execute on our A plus setups and wait and are patient, does that allow us to be successful within the markets? Majority of the time, the answer is yes. Having the proper stop losses, taking the proper approach to the markets in order to ensure that, hey, I will make sure that what I'm doing allows this trade to be probable compared to improbable of going in and executing when you know you shouldn't be. So, scaling down in time frame, you figure out, okay, what do I want to execute on? What do you do next? You wait. And you continue to utilize other retracement tools. Here, you can see for this example, if I delete the risk reward position, we also had a 1-minute fair value gap. We're simply scaling down in time frame. That's it. Don't overcomplicate it more than it is. That's why this video is not going to be 20 minutes long, because you don't need to overcomplicate it. You figure out and you continue to scale down. And this is how you get your sniper entries. Now, guess what? You went from a 1-hour fair value gap retracement, looking on a 1-hour time frame, to scaling down and saying, okay, let's go on 15-minute and see what we can do. Oh, okay, price came up and swept highs. Oh, let's go to 5-minute and see what we can make work. Oh, 5-minute broke structure to the upside. Guess what? Let's go to 1 minute and let's see what we can make work. Oh, cool. There's another fair value gap in 1 minute. So now, what do we have in confluence? We have 1 hour. We're playing off a 1 hour confluence. Not only that, but overall macro daily bias confluence. But with the retracement, 1 hour confluence, 15-minute, 5-minute, scaling down to 1 minute, waiting for this fair value gap to get filled. Bam, the break of structure to the downside. Guess what? You just executed on a fair value gap retracement, break of structure to the downside, not counting the overall 5-minute liquidity sweep break of structure to the downside, and 15-minute retracement break of structure to the downside, and the hourly fair value gap retracement. Now you see you have a lot more probability within your favor. How you go in and execute within the markets is so important. Being able to scale down in time frame and being able to go in and look at the overall big picture, but actually look to execute on the very itty bitty tiny price point executions. scalping executions, we would call them, or sniper entries. Targeting whatever you want to target. So that was a video on execution. Very, very self-explanatory. Don't overcomplicate it. We are going to start to get into more psychological aspects that you guys are struggling within your trading. I'm still getting a bunch of questions, and I'm here to answer them all. So the Moneypreneur series is not over. No. We have a little bit ways to go. I want to help you guys get a full understanding for the charts and with what you trade in order to be able to go in and do it yourself. We are going to do episodes on how to learn from your mistakes, and maybe that will be the next video. If it's not, take profits and draws liquidity and all of the sort. But take profits and stop losses, 100% would be in the same video. Speaking about validating SLs and all of the sort, and how to properly target your take profits on the day and see, okay, what is the most probable outcome on the day. With this trade, I only had three DPs set, and everyone was asking when within the live call, Lonnie, what is that risk reward? It was 1 to 2. It was 1 to 2.5. And I said, this is my proper draws liquidity for the day for profit. I'm not, going to sit here and try to target more. Price came down actually, hit all 3 TPs. I was out of the trade. A lot of people would have kept their trade riding for the day. I didn't. As you can see, rest of the position would have gone stopped out at break even. I wasn't on about that. You have to know how to target proper take profits, proper draws liquidity, and all of the sorts. So that's going to be in the next video. But apart from that, I love you guys. And yes, for you guys requesting a video on MetaTrader and how to go in and do all that, I will do that eventually when the time comes. But apart from that, I love you guys, and I will see you in the next one. Okay, can we get some outro? Can we get like a fade transition like this? If I do this, will it work? Maybe he'll do it, maybe he won't. So let's try it. Just be like, ooh.